thing that really needed to be in place that was missing was stablecoins. We had blockchain. People started believing in the idea of the upgrade to the plumbing using blockchain as a source of truth that I mentioned earlier. But what they didn't have was a payment mechanism. So that payment mechanism is what really changes everything.
Hi, I'm Andrew Packer from Being Crypto. I am here with Travis John, head of institutional US investments for XDC. Thanks for joining us here at Consensus.
Thanks for having me, Andrew. Appreciate it.
Yeah, it's a great conference so far. Pretty interesting to see everything that's coming in now. Obviously, I want to kind of talk with XDC. You're doing some really interesting things. There's a lot of discussion about the integration of crypto with the traditional financial markets, and you're doing something a little different with that. So it's like the financing trade. So walk me through what that is, why that's the opportunity, what's happening with that.
Yeah, I think one of the biggest things is trade finance is a way to label what we're doing. And this started way back. Since 2019, we've been building these rails, and it's just a better way, a better, faster, cheaper, more transparent way to track global commerce. So think import, export, think about the food chain or supply chain of what goes around the world. Ultimately, those rails have been built on legacy systems. We hear that a lot in our industry, where the financial system, other systems are antiquated, but there's not a source. There's a record over here, there's a record over here, and everything is not consolidated or captured into one source of truth. And that's where blockchain comes in. We always start all of our fundamental building at this layer of the blockchain, and that's the digital ledger. So ultimately, when you can create a source of truth there for the documents, a typical trade transaction, say, for example, coffee or cocoa. Coffee has 9 different parties involved, multiple banks, multiple import, export, logistics involved. Something like copper has 11. So that industry was a perfect fit for trade finance. Our principals have backgrounds in these areas as well. So it just made perfect sense to continue down this path. And this was a very early initiative, well before a lot of the crypto push into like an RWA, where things have been kind of labeled as RWAs, et cetera. But we certainly have gravitated that way as well.
And I think what's fascinating about that is you have the system that's been very inefficient with systems that don't talk to each other, and now one standard, one way of kind of doing things. Like, what kind of results on average are you seeing like as an improvement kind of with integrating the system?
Well, I think number one is there's 2 parts of the system. The way we're building it is bottom up and top down. So for example, the industry has all the antiquated records and disparate systems at the top. So think about what a Bank of America or JP Morgan or large FIs, HSBC, Citi, what they're dealing with in trade finance. So they're typically the banks that are involved in very large transactions. They're going import, export. In those cases, they're dealing with a very fragmented system. There's not as much lack of trust, but there's different factors involved and different banks involved across the world where there's correspondent banking and trust that have to happen. We help collect that in a way that there's a source of truth, as I mentioned before. Then there's also the bottom of the funnel, and that's really where we've spent most of our time. That's where it aligns really well with crypto and where kind of people think about how the digital asset movement evolves. And the trade finance industry, just even to back up a second, is about 15 trillion, give or take, in size. So it's significant. There's a gap that's been identified by the Asian Development Bank. They've done this study for multiple years, over 200 FIs and over 50 countries that have shown that there's a 2.5 trillion plus gap. And what this means is there's exporters and importers that cannot come to deals. Because there's not enough clear underwriting and clear records, because everything's disparate and the lack of trust, that they're unable to get any financing at all. And any of the financing they're able to get is at extremely high APYs. So the way blockchain solves that is we're able to step in, create a decentralized opportunity where anybody can fund these opportunities, and free markets as well as banks. So individuals, banks, accredited investors can all get involved in these markets and provide funding at fair rates to these essentially importers and exporters that have been completely locked out of the system. So that's really where we see the biggest opportunity right now. The top down is definitely a back office cleanup, but the bottom up is a back office cleanup, plus it has the financing component, and that's where the trade finance comes in, is really bringing the finance part to it.
And that's great. I mean, a lot of crypto projects are really about sort of increasing that global accessibility to the economic system, and that's another way of doing it. So that's certainly fascinating.
Yeah.
Also, what I like about that is, now you're going to know exactly like where your shipment is, where it is, how much, the quantity, and it's a lot harder to potentially lose things or have that sort of shrinkage that can be a problem in a lot of like physical industries where things just sort of fall off the truck.
Exactly. And that's really where a lot of the mispricing happens and a lot of the high pricing, frankly. But because things get lost, you don't know, you know that bad things are going to happen across those touch points. By using our certificate of authenticity and all of the verifications that can happen across the chain, across logistics, all the touch points, as well as each of the banking partners, it allows that trust. You start with the source of truth, but it allows that trust chain to continue throughout all parties. Like, so if of those 11 parties that are involved, they're able to see visibility at that underlying level. So they're able to price it based on what the real risk is versus what they've had to price it in the past 20 years or more. Right.
And if something happens, like, immediately. So I think that's another huge advantage and where crypto speed comes into play. So at this point, you've been around since about 2019. You're now processing about 100 million a day in volume. So, I mean, what does that figure represent really in practical terms? I know you mentioned, this is kind of a potentially $1 trillion market, if we're actually looking at it. So.
Yes, absolutely. Yeah, so in our capacity, that's correct, 100 million. Where we see this going is trillions, of course, yes. Yeah. Cross-border payments, we just now have finally reached a point where, as we've been building this for over 6 years, it sounds like a long time, but when you think about all of the things that had to be in place for this to work, the thing that really needed to be in place that was missing was stablecoins.
Okay.
So we had blockchain. People started believing in the idea of, and the concept of the upgrade to the plumbing using blockchain and the source of truth that I mentioned earlier. But what they didn't have was a payment mechanism.
Okay.
So that payment mechanism is what really changes everything. So the Genius Act, MiCA, regulatory changes have made stablecoins legit on the balance sheet now. So CFOs, whether you're a small company or you're a CFO at a large company, stablecoins actually are legitimate balance sheet currencies now. Okay. So that's really changed how money's going to move and the trajectory of what we can do as a network. So that 100 million, of course, is early days compared to where it's going.
Right, and there's still a lot of institutions waiting on that regulatory clarity for stablecoins, which will kind of open up the floodgates a bit and probably 100%. Make your job a lot easier to really scale up. Yeah. So I guess at this point, what additional kind of policies or things have you sort of added on, or is it just sort of this blockchain kind of technology tool?
Well, we're definitely the settlement layer.
Yeah.
So ultimately everything settles back to us. We have multiple partners, ecosystem partners building on top of it. I think one thing I would like to make maybe a couple examples when I mentioned about the top down, XDC made an acquisition of a company called Contour Network. It was a consortium of over 100 financial institutions, 8 specific principals that were doing proof of concept. They're all around trade finance. HSBC, Citi, Standard Chartered. They created this a number of years ago, and they weren't able to get everything going because it didn't have the financing component. They only had 20 banks that were doing the trades back and forth. It was letter of credit. Do you think about the letter of credits that happen that banks issue? Yeah. There's so many banks across the world that there's much more than 20. So you have to build out the network. They weren't able to fully build out the network because it was a closed network. With now that XDC owns Contour or made the purchase, that's a way to open up the top-down approach to bringing a financial layer or the financial institutions into the play, because the blockchain will become now that network. So Contour Network will actually run on XDC.
And I know banks have been skeptical kind of this technology, and they've been very resistant to it, but they're really kind of starting to just embrace it now, recognizing the inevitable. So are you adding additional bank partners right now and sort of expanding that network further, or are you happy with where you're at?
We're definitely expanding, of course, yes. I mean, I think the banks are all, whether they're actively moving right now because of things like in the US, like Clarity Act, or they're just due diligencing, they're all talking about it. They're all showing up at events like this. They're all getting very active. They're doing one-on-one meetings. In some cases, they're just not, their investment policy or what they're doing as it relates to cross-border payments and trade finance they're not using stablecoins yet. But that's where the Contour network and from the top-down side for FIs makes a lot of sense.
Yeah.
Because they can join the blockchain side, and then they can do business with a correspondent bank, say US to Bulgaria, et cetera, and then all of that is transparent. So yes, the demand is significant. And again, from the bottom up, same side, we're seeing quite a bit of demand because the importer exporters, for example, they might be paying 25% APY on some type of deal or multiple basis points just to do a deal, where this can go down in half, or you asked earlier about some of the costs and things like that. So we're seeing at least a 50% reduction in what the current market offers, and that's not counting the increased settlement time. So typical settlement times are up to 7 days or more.
Yeah, especially with bank drafts and letters of credit. Yeah, that's a very slow legacy system policy, and then blockchain's like 10 minutes and you know where everything is.
Yeah, and even with fiat, where we do what's called the stablecoin sandwich, where you have fiat coming in, and you have stablecoin in the middle, and then you have fiat on the off ramp. Even that can be done in 24 hours, which is exciting because you can still on ramp, off ramp, and have the stablecoin in the middle. Not only are you saving quite a bit on costs, depending on how much you're sending and where you're sending it to and from, you now have something that can happen in potentially 24 hours based on who's involved and what parties and what needs to happen. That used to take at least 7 days in most cases.
Yeah, I mean, so big time saving, so faster turnaround on shipping, faster turnaround for investors. I mean, that seems like, win-win for everyone.
It is, and I think from the investor standpoint, since you pointed that out, why we see this as such a big area is this is a claim on cash flows. So what's interesting about it is this is real businesses, real goods that are moving from point A to point B with real purchase orders, real invoices. And investors see this as an incredible investment opportunity. This isn't speculative.
Right.
They know that this, now that we have a chain of trust, they have a very defined underwriting criteria of how they can invest, how banks can set their terms. But then also from investors that want to fund these deals, they see this as an exciting asset class now because they do have full transparency. And these are short durations. So think crypto, DeFi.
Right.
Everything settles within, like I said, up to 24 hours.
And the shorter you make it, the faster you turn it around, the higher your annual return can be as an investor.
Exactly.
So there's just a great advantage to that.
Yeah.
Definitely. Let's talk a little bit about what you have, like tier one institutional validators. You've got companies like Hashkey, SBI, Deutsche Telekom. Like, what does it take for like an institution like of that size and scale to kind of work with you guys, and like what's sort of the process behind that, and how does that play out?
Yeah. I mean, we're certainly thrilled to have some of the top names working with us. They definitely don't take due diligence lightly, right? These are not marketing deals. Yeah. These are straight due diligence on their side for them to put their logo out there and align this partnership and be supporting the network. So first of all, they are not just, in a validator standpoint, with 100 million running through in volume, we need these validators to be there to keep the uptime on the blockchain. Right. So ultimately, they're serving a really strong purpose. So it's not a complacent job, right? So for them, they're not just due diligencing us as a company and the opportunity as a vertical, but then they're also needing to commit to the validator requirements, which we hold very high for the uptime, et cetera. So very, very common across the crypto industry of tier one enterprise blockchains like ourselves. So they know the standards are high, but why they want to participate is they bought into the story. The story I've been telling you today is that trade finance and the way we're upgrading this system is, once you hear this story, you can't unhear it.
Right.
And that's generally what they're telling us. And then they find a way to get this into the right people to do the due diligence. Because ultimately it starts with a conversation, and then you have to go through the multiple areas of compliance, legal, and all the team members to be able to do that. And then even technical to host the validator nodes and be able to run the servers.
Yeah, I mean, there's a lot of sort of infrastructure that goes into that people might not necessarily think about, and having sort of a decentralized partnership with a lot of these big names, definitely, I think it's sort of setting you up for success and making sure that everything's going to go smoothly for, vendors, customers, investors.
Yeah, exactly. And it's much more than just the logo swap and, you're getting an investor, as you noted. Yeah. And as I was clarifying, it's very much a commitment that we have. It's a two-way street, and we're, like I said, certainly thankful to have them on board, and we have inbound every day of new institutions and investors and other larger protocols that are saying, hey, like, let's find ways that we can do this together.
Yeah, so it's a really interesting kind of growth opportunity there. Obviously, another big theme that we're seeing with crypto right now is sort of this tokenization of everything concept. It's a little different than what you do, obviously, but it is the dominant narrative right now. Your approach with the trade finance, how does that sort of differ from because you're not really tokenizing those assets that are moving, you're essentially just making sure they're on the blockchain and trackable.
Right, exactly. So tokenization in general is fine. I think of tokenization as financial, or think of tokenization as a financial asset. What we're doing in the trade finance flow is digitization. So we're essentially using digital ledger technology, and we're able to bring those, say, bill of lading invoices, and then we're able to digitize them, put them on chain, and then provide all the proofs that are part of that. We also do tokenization. We do institutional tokenization, enterprise tokenization, all through a compliant pathway. We work with multiple partners in that area. So Securitize and many of the other ones known in the industry. So that's where our partners pick up, because we're the blockchain rails for settlement. So our tokenization partners are very active in doing this as well, and we support them.
Excellent. Obviously, there's a lot of regulatory movements that are happening. Here in the US, we're talking Clarity Act right now. There's, I think, a big uptick in sentiment because it seems like we're getting across the finish line, but there's the MICA in Europe, APAC. How do you position yourself kind of within the landscape to make sure you're kind of benefiting from these changes on the regulatory front?
There's a lot, and I'd say the short answer is we went from headwinds to tailwinds from a regulatory standpoint. We still have the Clarity Act in the US, so there's some light at the end of the tunnel there. Genius Act is there, MiCA is in place. Singapore, the multiple jurisdictions have moved stablecoins onto the balance sheet, as I mentioned earlier, and I feel like that's opened up so much for us, because ultimately we have routes all over the world. Trade finance is just moving goods, moving goods back and forth. So the most important part of that is not just now creating the source of truth in the technology of the flow, but it's taking the financial component of the stablecoins that we talked about earlier, and then bringing that part from Singapore to the US, Singapore to EU, Turkey to the UAE. So all of those routes are important, and if without stablecoin regulation, that won't work, because ultimately that's what saves money. Current SWIFT rates are much higher, where if you can move to a stablecoin settlement layer, that changes, again, probably 50% of your costs. So that's where institutions see a big opportunity there, but regulatory framework has held them back. So that's a big deal. And also, I'll add that local non-dollar stablecoins, we talk a lot about USDC and USDT, but we have UADD, which is the Australian, or AUDD, I'm sorry, that the Australian stablecoin. You have the European stablecoin, which is a Circle stablecoin, and you also have a new one that was just announced officially by Canada. We're now legally approved in Canada, which is the CADD for Canadian stablecoin. Where that's important for our network is trade finance starts locally. So even domestically, we see interest moving from A to B, even domestically. And then also outside of that, so we're supporting that last mile where somebody wants to settle in AUDD or CADD because of geopolitical reasons, etc., incentives, you name it. And then also they can use that as a off-ramp, etc., or an on-ramp. So ultimately I feel like that's something that a lot of people don't realize, how they wonder why there's so many stable coins. And there will be a fair amount, and specifically local ones I feel are an interesting part of this trade finance story.
So you'll be trading sort of within the same stable coin within a region. So like Australia, which is very resource heavy, moving goods and services around there. Same concept. You're not just going to the US dollar backed, tether, and then kind of back again and having to deal with foreign exchange kind of a thing. Because otherwise you're just sort of creating the same inefficiencies that are already in the system in the first place. So
Exactly. So between SWIFT and FX fees, that can be 3, 4, 5%. And that can be cut down at least 50%, but typically even significantly more. And that's where some of these local currencies change the game, and how that FX factor becomes less painful.
It's amazing just talking to you how much trade finance sounds like it's still stuck in the 19th century. You've got to do your foreign exchange and bank letters of credit, and every single step will take 3 to 5 business days to settle. So sounds like what you're doing, with XDC is just revolutionary and and well overdue in the digital age.
Yeah, and we like to think it's revolutionary, but it's very grounded, which is interesting. I feel like the opportunities is, like I mentioned earlier in the conversation, is blockchain is really where all our thesis starts. Right. And if the blockchain can't solve it, we're not a solution looking for a problem, right? Like there's a real problem, and it needed those 11 parties a way to talk and to have visibility. And then we needed the currency, like stablecoins, to bring that across there. But it's kind of a boring business, right? Like it's just people sending coffee and and copper and all the rare earth minerals, which are not boring to most people now, because rare earths are a big topic in the world. But
just because it's boring doesn't mean there isn't room for improvement.
Exactly.
Just ask the taxi companies about Uber. Like innovation is here and here to stay.
Exactly. You find things that the world's moving goods every day. We're cutting costs, we're improving the rails, and we're providing all the partners the ability to do that and build on our chain as well. So it's it's open for anyone that's coming here that is part of that $2.5 trillion gap, and they're unable to get financing now. They're moving goods and services. There's a lack of trust. We have a blockchain solution to solve that.
That's great. Well, congratulations on the success so far. I do want to just kind of ask about looking ahead to the future. Obviously, you've done a lot so far, making some moves here. Obviously, with the clarity coming in, stablecoin, adoption should soar, should be great, give you a chance to capture more of that industry. What do you have kind of in the pipeline? What are you looking forward to in the next 18 months plus?
We're obviously going to continue evolving our footprint on trade finance. I mean, it's huge, the cross-border payment stuff with all the stablecoins, as we mentioned. But one of the things that's very interesting is we've had investor demand, as I noted to earlier, and many investors, particularly in the US, don't have access because of their investment policies and because of how their compliance rules are set to be able to access the XDC token, our native token that supports the network. So we do have a leveraged ETF that's in the works. I can't share too much more about that, but that's going to give accredited investors and regular investors, retail investors here, the ability to access XDC in a new regulated format, in a wrapper that we spent 6 years building, and now we're providing a financial product, hopefully.
It's a very non-traditional asset, and a lot of those are finding their way into the ETF world and becoming a way for people to kind of just put a little slice of their wealth into and take advantage of kind of the alternative returns that they can get from that. So looking forward to hearing more from that as you get closer to it. But otherwise, All right. Well, thank you so much for joining us today and covering everything that's going on at XDC. Fantastic times. Thank you so much for your time.
Thank you, Andrew.
Take care.